We don't know when the end of the cycle will be because a lot of people think it has to do with the date, but it's typically more about market structure. Maybe it gets down into the 50 range. Should be about the low. That's what I'm expecting.
What is your guesstimate as a guesstimate?
This market analysis is packed with valuable insights from Mark Moss, who recently had a fascinating discussion with Robert Kiyosaki. In this conversation, he shares his latest medium to long-term outlook for Bitcoin and explains why he remains highly confident despite the recent market pullback. While many investors are focusing on the drawdowns, panicking, and selling, Mark Moss breaks down the bigger picture and explains why he believes his prediction will ultimately come true. So, let's hear what he has to say.
And so Bitcoin and crypto in general gives us this opportunity that we haven't had before because it's been the best performing asset in history and any time frame. So the best asset in 15 years, 10 years, 5 years, 3 years, and this year. So that gives us this opportunity to make up that gain that we need. Now, I believe this will continue for a couple different reasons, but mainly what we're witnessing is the digitalization of money, and digital assets will always move faster than physical assets. So the digitalization of money, digital capital, as we call it, will outperform the S&P 500, which is companies, brick and mortar. And S&P 500 productive businesses will always do better than credit. So we have those three markets. Okay, so Michael Saylor states that Bitcoin will continue to have at least a 30% compound annual growth rate for the next 21 years. So let's go with that. What that means is if I have $10,000 today, that will be $2 million in 10 years. That's how compounding works. 10,000 today becomes 2 million in 10 years. So you can make up a lot of room. I think that Bitcoin can achieve around $1 million in the next 5 or 6 years. It's about a 8 to 10x from here today. So I project it will hit about $1 million by 2030, 2031. So that would maintain a 50% compound annual growth rate. So over the last 3 years, it's been 60. I'm saying it will continue at 50 for the rest of the decade, the next 4 years. That means that if I had 100,000 in my retirement account, I could buy 100,000 of Bitcoin, and that could be worth about $1 million in 5 or 6 years from now. Now, how do we retire off of this? So that's the first part. How do we make up ground? So if you're behind, you can put some into Bitcoin. It's projected to return somewhere between 50, maybe down to 30% compounding over the next 5, 10, 20 years.
What is your guesstimate as a guesstimate?
I think in 50 years from now, or less than 50 years, Bitcoin is worth 43 million
Per coin.
per coin.
And how do you compute that?
Yep, let's get to that. So the way that you would look at, say, a Silicon Valley investment, if I was pitching you on Uber, 15, 20 years ago in Silicon Valley, I'd say, hey, Robert, I have this way to call a ride from your phone. And you're like, oh, like a taxi? I'm like, yeah, like a taxi, but it's better. It's more convenient. It's Uber. You're like, okay, Mark, how much is it worth? I say 100 million. You're like, what? Where'd you get 100 million? Well, Robert, the taxi industry is this big. The limo industry is this big. The van share is this big. If I get 5 or 10% of those, I get to 100 million. So that's sort of the way that you look at the markets is disrupting. So Bitcoin is going to be a lot of things more than what we know, but what we do know today, it's competing as a store of value.
Correct.
So it's competing against value itself. So what are the store of value assets? Gold. We have about 14 trillion. Goldman Sachs, JP Morgan, they've put out guidance that it will overtake gold at some point. So that's about 14 trillion. We know that also rich people store their wealth in cars, fine art,
Stocks,
collectibles, things like that. And that's about 25 trillion right there. We know that people store their wealth, not in dollars, but in the stock market, 120 trillion there. We know that people store their wealth, their value in real estate. There's about 350 trillion there. We know that people store their wealth in bonds. There's 300 trillion there. We know people store their wealth, some of them in fiat, about 120 trillion there. And we know people store them in offshore bank accounts. There's about 30 to 40 trillion there. If we add that up, we get to about $900 trillion. And to really put this home, Robert, for your listeners, if I were to buy a stock, let's say I invested into your business and I bought let's call it whatever, 10%. I own 10% of your company. As you continue to raise money, a lot of times I get diluted.
Right.
So I don't own 10% anymore. I own 5%, 1%. If you think about it, right, nobody wants money. We want the wealth, the goods and services. And so really it's all the money in the world divided by all the goods and services of the world. But if I own, let's say 1% of the US dollar ledger, I own 1% of the dollars in circulation, I own 1% of the wealth. But as they print more dollars, I get diluted. I own less and less as the ledger. But Bitcoin changes that, because let's say that I could own 1% of the Bitcoin ledger. Then the Bitcoin divided by the assets in the world, I never get diluted. As the assets of the world grow, I continue to always own 1%. So it's pretty revolutionary that way.
Right.
But back to this.
And what I say is, as Bitcoin goes up in purchasing power, as the dollar comes down, that's how I see the whole thing. I'm going, it's like, I've in Rich Dad Poor Dad said savers were losers. But Saylor says, what do you call somebody who saves fiat or US dollars? He says, poor. Poorest people are saving fiat. They don't understand Bitcoin or crypto yet,
So I think what I think is it's $900 trillion. I think that Bitcoin can easily capture 10% of that market in the next 5 or 6 years. That brings it to about a $200 trillion valuation. That would be $10 million per Bitcoin. But what happens is money is evolutionary. So it starts as like, oh, look at this cool rock or feather. It's a collectible. As it could eventually evolve to become a store of value, fine art, cars, etc. If it has the right money attributes, portable, divisible, durable, etc., it could go to a medium of exchange. And then the final stage would be a unit of account. And I believe that in less than 50 years, Bitcoin will be what we call the unit of account. Instead of measuring things in dollars that are changing all the time, or euros or yen or yuan, I think Bitcoin will become the unit of account. So then we take the 900 trillion divided by the 21 million, gives us $43 million per Bitcoin.
Mark Moss continues to strongly believe that his prediction will eventually come true. That is exactly why he is encouraging everyone, whether you are a new Bitcoin investor or a long-term holder, to take advantage of these drawdowns and pullbacks to increase your Bitcoin exposure while the opportunity is still here. He believes that in the future, many people will wish they had accumulated more Bitcoin at these prices. That's why he says the time to act is now. Don't focus on those telling you to sell out of fear. Instead, stay patient, remain confident, think long-term, and continue buying the dips whenever possible. The biggest opportunity could still be ahead for patient investors willing to wait. Wish someone taught you Bitcoin earlier? Now's your chance to do better for your kids or young family. This teen ebook is perfect. Link in the description.